Thank you, Gideon. Is my mic on? Yes. Just these things on. Yes. Okay, great. Thanks, Pierre, for the great context that you've laid out. A lot of interesting topics splash on our pages. Of course, South Africa Pick and Pay now sets crypto payments. And the latest data I read was that they process on 1 billion rand worth of crypto payments per month. And so small if you see the things, but the early stages of the infrastructure that's involved for payments is there. On the state banking as well, I think, of course, we know as processing goes as well, should we have a deceased family member or someone that we need to, with Bitcoin, that Bitcoin falls to say they can't really contact us as well, and we have to process it to support them. I think firstly, all this like engaged to the level of crypto ownership. I know with ownership status for Joburg, but not Victoria. So maybe by show of hands, how many of you own crypto, or you previously owned crypto through all the moves in the past of the crypto market, and those who thought as well, please. Okay, people do that. Great. Okay, before we start, first a bit more about myself. My name is Mario Says. I come from the farming community in the Western Cape, Swipemat. I stayed in St. Bosch on the management accountant, although I had very general ages or leisures for many years. I joined Luno in 2016 as finance manager, and then from there, free to various different roles. And currently, I'm the GM for Africa, and my role stretches a niche, deep, and a mile wide. So I do a little bit of everything at this moment. I think firstly also, crypto is only been licensed, or Rio has only been licensed for 4 or 5 months now. So I think sometimes we still suffer from this foster syndrome as crypto industry. I think the chair stage with the lawyers and the asset managers, the cybersecurity experts. So hopefully there's something unique today. It is possible again to got the industry from A to Z in such a short space of time, 20 minutes. So a presentation is like a Christmas tree is over anything. So hopefully there's something that you can find that in. I need to think of a bit of slides. Okay, so Luno was the first cryptocurrency platform, exchange. I'm not sure really what to call it. And it was founded in 2013 in South Africa by 4 South Africans. It was one of the first cryptocurrency platforms to start operating globally, and only a handful of crypto platforms that started operating in 2013 still on today. We currently operate across 40 countries globally. We're a team of around 650 employees across 4 continents. South Africa is still all the operational hub. So we have an office in Cape Town and an office in Joburg, and around 450 employees in South Africa. It's very cool. We make it easy for people, individuals, businesses, legal entities, trusts, to convert fiat currency into cryptocurrency. We provide a custodial service, so you can store currency with Luno, and then we also give the option you can save and further. So you can transfer your cryptocurrency to the friend or the business. You can pay a supplier cryptocurrency. You can receive the selling cryptocurrency, also Luno. And based on that point, so if I think back to my early crypto journey, we started in 2016. So as I said, I was an role finance manager, but I also assumed an official role. If you work in a startup business, and you are involved in every facet and aspect of the business. So I traveled to Nigeria often, 2016. And we hosted a meetup really big for our customers in Nigeria in 2016. Those were the early days of cryptocurrency. Very few people knew about it. Most people saw it as magic internet money. They didn't know it, what to think about it. And it was mainly linked to speculation. People wanting to make a quick buck. But so many cross African markets, engaging with people on the ground, people with very specific needs that the existing financial system cannot solve. That's where you really start to understand the power of this technology. And my big dog moment was in 2016 in Lagos, when we engaged with a room full of people, of which very few were there for the financial or short-term financial incentive. But the issue that they had was, really because of the fact that politics, in many emerging markets, politics drive the economy or economics. And it should be the economy drives politics. But in Nigeria's case, what the impact of politics on the economy had was a lack of currency. People could not access dollar to pay for imports, and people wanted to seek alternatives. And I think Africa, large emerging markets of South Africa, are very creative people. If you have a problem, if your needs cannot be met, you get creative, you become creative, and you find an alternative, you find a solution. And that is what the Nigerian people did when I had my dream job on it. They look for alternatives, and in Bitcoin, they find an option to continue doing this, to continue to pay these suppliers because of the constraints placed on them by the Nigerian government. Right, so later see quite nicely, you said to see quite nicely, those are the evolution. I'm not going to delve into that too deeply. I think the only comment I can make there is that if you think about all of that, the only constant in the evolution of various information systems, the way in which you communicate all money is change. Right? And change really, especially technological change, really is a bedrock of prosperity and of economic growth. For change to happen, in our view, three things need to be present. Firstly, a collective mindset change. Because we've used money in certain ways in the past, doesn't mean that we have to continue to use money in that specific way. Money can change, money can evolve. Secondly, rapid changing consumer needs. Consumers expect things customized to their personal needs. They expect services and products or services, basic services, cheap or free of charge, delivered in a very, very timely manner. And lastly, technology as an enabler. And as I said, technology immediately introduces some of the brands they start completely disrupted the landline telecommunications infrastructure when you can make calls pretty much free of charge globally in a second. Airbnb completely disrupted the traditional hospitality industry. Amazon introduced peer-to-peer marketplace where sellers can connect with buyers. And then, in our views, we see Bitcoin as one of the potential vehicles or technology to drive disruption in the way in which we use and the way in which we think about money. And people often talk about fintech, financial technology. In my view, Bitcoin is not financial technology. Financial technology typically seeks to create a slightly user experience. Financial technology typically reduces the cost slightly easier to transact and to store your funds, nice app, and slightly cheaper, but it doesn't change the underlying manner in which currency is stored, which it's transacted, doesn't remove the number of intermediaries involved in the process. So from Luno's perspective, I think Luno and banks and fintech companies, intelligence banks all agree that there's a better way, and there should be an easier way for us to access and use money. Our vehicle, and that we believe in is Bitcoin. Okay, so a very, very brief overview. I'm not going to go into too much detail. There's our level of ownership in the room. So pretty most of you did your research before you did your first investment or transaction. The concept of digital money was not first created for after 2008 when Bitcoin was first launched. The concept of cryptography, initially for information share, was first established in the 1970s. And very layman's terms, that's the way in which you secure the transfer of information, the way in which you communicate. In the 1980s, a early version of cryptocurrency was created called BT Cash. It was also a peer-to-peer form of money, using cryptography as means to secure transactions. In the 90s, eCash, and they culminated in launch of Bitcoin in 2008. So about the internet, the first concept of the internet was first half was created in the 1960s, but only really came into use, and the probably in the early 2000s, widespread use. The cryptocurrency has gone to similar evolution. There are many definitions of cryptocurrency, specifically Bitcoin. I haven't heard one that's really, that explains it in 30 seconds, and I don't think one either. But you can think of Bitcoin as digital public payments infrastructure. So think about that. Public payments infrastructure is infrastructure that we can use with their place we can say, sorry, peer-to-peer public payments infrastructure. And I guess when it comes to mind, really is cash, right? Because you transact with someone, you want to buy something through a Facebook marketplace, you quickly meet up. You can pay the seller in rands or banknotes. There's nothing really in that transaction. It's you and the other person, you exchange the cash, it's a peer-to-peer transaction. But it's convenient, comes with risks, security risks, that could be. And so that's the way of doing that. And so that is the premise I think on which Bitcoin was formed and involved. It's similar to cash, public peer-to-peer finance infrastructure, set for public visual. Now, blockchain then is completely different topic. But if I can explain that in 50 seconds, when you transact with someone else, you do an EFT payment. That payment is processed via bag A, bag B, and it's processed through two separate general ledgers. Bag A's general ledger, then the credit, bag B's general ledger, then the credit. If you transact with someone overseas, then there will be corresponding bag in the middle. So then you have three general ledgers. There has to be a constant transaction, each intermediary adding to the time delay, but also adding the fee to process that payment. With Bitcoin and other cryptocurrencies, you have one global public ledger, and all transactions get processed onto that one ledger. And that reduces costs, it reduces complexity, it enhances security, and also improves transparency. That funny looking animal, not sure if anyone knows what that is. It's a platypus. It's an animal that I think crosses three different, it has features of a duck, it has features of an otter, it has features of, I think many other animals. It's an animal and it lays eggs. So it's really complicated. But it's also versatile. And if I can compare that to Bitcoin, Pierre touched on that. Bitcoin can act as a store of value, and that's the current use case. Most people purchase Bitcoin to invest funds, or it can be used as a medium of exchange. It can be used to transfer funds from point A to point B. And I think that versatility really linked itself to massive network effects over years to come. You almost think about the versatility and the potential impact on Bitcoin's price. If you think of Visa, the company, these are the companies publicly traded. You can purchase Visa's share on a stock exchange. Visa's share price is determined by the usage of the Visa network. How many banks use Visa as the issuer of their cards? So the more people that swipe their Visa cards at coffee shops and wherever online, the more valuable Visa as a company becomes. And the same can be applied to Bitcoin. The more people that has access to Bitcoin, the more people that transact with Bitcoin, the more people is in the system, and the more valuable the Bitcoin network as a whole should become. The fourth key characteristic in my view is optionality. With Bitcoin, I think it's the only digital asset with a value that you can self-custody. You cannot take your rands, digital rands, sitting in your bank account and take self-custody of that. Custody your digital funds in your safe at home. But with Bitcoin, you have the option. You can either store your cryptocurrency on a crypto platform like Luno, free of charge, or you can decide I want to store my cryptocurrency and keep it safe myself, in my safe at home. There are many different ways in which you can do that. But again, Bitcoin or crypto gives you an option, and no other digital asset with a value enables you to take self-custody of your own funds. And then lastly, we often hear references of Bitcoin in comparisons to digital gold. And the main reason for that is certain or lies in Bitcoin scarcity. Only 21 million Bitcoin can ever be in a supply or in circulation. The way in which new Bitcoin is introduced into supply happens through a process called Bitcoin mining. Won't go into detail, but Bitcoin miners fulfill a very important role, and that is to process transactions, to verify each transaction that takes place, and to post that transaction onto the Bitcoin blockchain. So many people see Bitcoin as a form of quasi gold, as early comparisons to a safe haven asset similar to gold. It's still very early. We will see whether that reputation stands the test of time. So yeah, apologies for all the graphs, but I will talk through it. The first point I want to make here is that of monetary policy. Now, the way in which monetary policy is set and decided in the traditional financial markets is through central banks, for example, the Federal Reserve in the US, the SA Reserve Bank, and monetary policy is determined and set in boardrooms at central banks. Set around interest rates taken off the back of inflation and many other factors. With Bitcoin, the Bitcoin has its own built-in monetary policy, and that is 21 million Bitcoin can ever be in existence. Bitcoin is released at safety intervals, and that process happens through the Bitcoin halving. Currently, only 3.125 Bitcoin is introduced into supply approximately every 10 minutes, 450 Bitcoin every day, and in another 4 years' time, when the next Bitcoin halving event happens, that will halve again, and the rate of supply will drop again. So if you look at this, the graph on the left, so it's very, very vague, but it's Bitcoin's rate of supply compared to that of gold. And during the last 4 years, 2021 to 2024, Bitcoin's rate of supply, i.e. the rate at which new Bitcoin was introduced into supply, was roughly 2% per annum, with Bitcoin's last halving event, where the rate of supply halved again. Bitcoin now has an annual inflation rate of around 1%, putting it lower than gold at 2%. I did not even look at fiat currencies because that must be probably north of 10%. The graph on the right shows Bitcoin's supply and demand curve. Now, if you look at the supply curve, you will note that it's very vertical, and that indicates an inelastic supply. So what that means is with changes in price, there's very little to no change in the supply of Bitcoin in the market, and that is because of the monetary policy, the way in which new Bitcoin is introduced in a predictable way into supply. Now, the result of that is price volatility. So that is why you see wild swings in Bitcoin's price. Over periods of time, the price will go up and down by 10% in a matter of a couple of hours. And it's because of the fact that it has a predictable, stable, but also inelastic supply. And I think over time, as more people own Bitcoin, as more people have cryptocurrency wallets, that volatility should come down over a period of time. Second graph looks at macroeconomics, specifically cryptocurrency adoption in emerging markets. To touch on this earlier, and that is how politics drive economics, an example of Nigeria. On the graph on the left, you see Nigeria's headline inflation. You will see sharp increase from 2020 to 2024 from around South Africa's levels, around 5%, to 52%. In fact, food inflation in Nigeria currently sits around 42%. The graph on the right, you see the rise in Bitcoin and stablecoin trading volumes in Nigeria. And you will see a similar trend. You will see as inflation starts to rise in Nigeria, you start seeing trading volumes in the Nigerian market also increasing. So people are finding alternatives. By keeping your money in the bank in Nigeria, as an example, you are losing value on a daily basis. And that again shows the role that Bitcoin can play as an asset that is independent from any government, any decisions taken in any boardrooms of central banks around the world. And that is why we see this rise in adoption, especially in emerging markets, where a lot of political instability actually drives adoption. Now, For any country to prosper, any country to achieve economic growth, you need strong institutions. I think that's probably the first thing that needs to be in place. Independent central bank, strong justice system, and in many emerging markets, that's not the case. There's a lack of institutions, and the private sector is filling that void. And that's another example of how cryptocurrency is replacing or providing or proving to be a better alternative for people than the traditional financial system. I'm not going to skip through, I'll just skip through this slide quickly. So looking at what does sustainable development and growth look like for the cryptocurrency industry. And often if you think back 12 months, you think not a lot happens in the crypto markets, where's the market heading into. But actually, I think if you're in the cryptocurrency industry, a lot happened over the last 12 months. Firstly, regulatory developments. Pierre touched on this, and I think the first significant milestone here is the declaration of crypto asset as a financial product of South Africa. That is significant, and it was a result of the better part of 8 to 10 years of lobbying, guidance, education, workshopping, with the FCA, with the SA Reserve Bank, and we are very happy about that development. I think for the industry and for the investment fraternity, the next big milestone will be, that's a big question, when will we see the first Bitcoin ETF traded on the JSE? We've seen the United States lead in terms of institutional products like ETFs. The Bitcoin ETFs traded on the NASDAQ and the New York Stock Exchange hold a combined market cap of around $40 to $60 billion. So significant investment flows into those ETFs. For South Africa, there's a bit of legislation that needs to be affected, and that's called the Financial Markets Act. So before the first Bitcoin spot ETFs could trade in SA, and you can invest in those ETFs through your current providers, there's another round of regulatory lobbying and work that needs to take place first. Institutional investment, we did touch on this just now. When you look at the United States, the introduction of Bitcoin ETFs, which is, for many investors, a really easy way to get exposure to the price or the price movements of Bitcoin without having to open their own cryptocurrency wallet with the cryptocurrency exchange, having to own the crypto themselves and safeguard the crypto themselves. So it is sort of opened up in the United States crypto investments for financial advisors to invest funds on behalf of their clients, but also individuals wanting to invest directly into Bitcoin ETFs. Market infrastructure, we've seen rapid development of market infrastructure, specifically on the custodial side. You might have a business, or you might have trust with significant assets, or you might have, the planning, you might see Bitcoin as far as your future investment mix, all these mix, but you don't feel comfortable to store your Bitcoin on a crypto exchange that is only just been licensed, only 10 or 11 years track record. So a lot of work is going in, again, working with regulators to create bankruptcy remote licensed custodians to safeguard crypto assets ring-fenced for that customer specifically, and I think that will also be a watershed moment for the SA investing fraternity. As soon as we have ring-fenced and licensed custodians that can safeguard client assets, especially institutions, that will lead a lot of trust for the market. And then lastly, risk management and compliance. So most of you probably heard of the FTX debacle and the collapse of FTX as I think it was the second or third largest crypto exchange globally at the time in 2022. It's very easy to get caught up in an argument saying that it's crypto, and that's because it happened. But in fact, it came down to risk management or the lack of risk management. Risk management isn't something new, something that's been around for many, many decades to centuries. And massive strides have been made by cryptocurrency firms in the industry to ensure proper corporate governance, to ensure proper controls, to ensure processes for these firms to be able to identify risks, analyze the risks, and then mitigate against those risks on behalf of their consumers or their clients. As an example on Luno, one of the very important functions, especially around the coins offered, is we have a custody committee. And the role of this committee is to very carefully vet analyze and conduct due diligence on all the coins that we offer and make available to our customers. Pierre, I think you mentioned 23,000 coins, of which more than 95% of those are outright scams, right? And so it's very difficult for the man on the street to be able to filter through all that and identify the ones that are safe, that have a proven track record, that is secure, that has sufficient liquidity. Those are all important factors. So our coin selection committee, which reports to the board, conducts that due diligence on behalf of our customers. Similarly, we also more recently partnered with Moore, the global audit firm, and they conduct monthly proof of reserve audits on our customer funds. So on a monthly basis, we issue a report to our clients, verified by Moore, that the crypto assets that you see in your Luno app is safely accounted for in the back. So the focus on risk management and compliance was also amplified now with the licensing of the first firms. And that's super important because we must have a regulator that can come in and scrutinize the business model, the operations, and the skills and experience of that firm on an ongoing basis. I think this theme that I've been playing on was that growth has been exponential. It might seem to most people that it has been linear growth, stable growth at a period of time. But if you look at the industry and you are in the same room as the regulators, you have conversations around institutional products, you can see the reasons why people purchase crypto. In the example of Nigeria, you will see that adoption is actually much closer than we think it is. That level of mass adoption, where it actually makes sense for you, and there's sufficient network effects where it makes sense for you to use Bitcoin as a payment method, as opposed to using a card or using a wire transfer. Just a little bit more about Luno, and we still a bit of time, just over. We make it easy for people to buy and sell crypto, individuals and businesses. And one of the options to provide customers is to invest in what we call a crypto bundle. And this bundle gives our customers exposure to a basket of 7 or 8 cryptocurrencies. We track the CoinDesk Large Cap Index. These coins are some of the coins with the largest market capitalizations, deemed to have a proven track record. And we then rebalance the bundle on a quarterly basis automatically. So on a quarterly basis, you ensure that your investment in that bundle represents the CoinDesk index. It's an easy way to do for people to gain exposure without having to work through all the data and intricacies of all the 25 other coins that we offer to our customers on the platform. We can dive into the business offering in a bit more detail during the Q&A session as well. And yeah, I thank you. I think that is it from Luno. Thanks, Pierre.